welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. The National Statistical Office is set to release the GDP data for the second quarter, that is July to September of the current financial year, in just a few minutes from now. While some economists expect India's GDP to slow down to 6.8% in the second quarter, down from 7.8% in the April-June quarter, recent data suggests that economic activity has been robust, leading to upgrades in growth forecasts. So what is likely to answer that question and many more? I am joined by Saugata Bhattacharya, one of India's senior most economists, Madan, Sabnavis, the chief economist at the Bank of Baroda, and DK Joshi, chief economist at Crisil. And as we start, I want to bring up the poll and what that has to tell us at this stage. And this is not the exit poll, viewers, because I know there's a political exit poll that everyone is waiting for. This is the GDP poll, and the consensus estimate is 6.8%. I'm going to go quickly to all my guests. Saugata, starting with you, what's the number that you're working with?
Thank you, Siddharth, for having me on the show. We are a little bit ahead of the consensus forecast. We are about 7 to 7.1. I mean, this is based on my former colleagues' projections, coming in largely from a very strong services segment, including construction and as well as relatively strong manufacturing, which we have seen also in the IIP numbers. The surprise might come in from agriculture. We are penciling in a small reduction in negative growth, minus 1.1%, but that might surprise on the upside. So that's the broad numbers that we are working with.
Okay, Madan, what's the number you are working with?
See, we are working at a number of 6.6, 6.7. Earlier, we had 6.2. So I think the upward projection is primarily on account of very good profits coming from the corporate sector. And this proxy is used for manufacturing as well as certain service sectors. So 6.6, 6.7 is our number.
Mr. DK Joshi, what's the number you are working with?
We are working with 6.7%. We expect industrial performance to improve in the second quarter and services to stay strong. And agriculture is something that needs to be looked out for, though the full impact of monsoons will be felt in the second half of the year. But overall, non-agriculture sector is particularly strong.
Non-agriculture is particularly strong. Saugata, some more color into the expectations, and particularly from the agriculture side, what are your expectations?
As I mentioned, that agriculture, we are working with it. We are penciling in a minus 1%. This is because of although the monsoon on the whole has been fairly good, but the spatial and temporal distributions have been relatively poor. So that is one area that we are concerned with. But on the other hand, I mean, this relates primarily to cereals. We might get an upside surprise coming in from fruits, animal husbandry, other ancillary activities.
Okay. Madan, in terms of the underlying growth trends, domestic consumption continues to remain strong, particularly in the urban pocket. What sort of impact is likely that to have?
No, in fact, Siddharth, I have a slightly different view, because we have seen what you have said, urban demand will definitely be better. But what we have seen is that rural demand will be a laggard. And even within the urban demand, it's more of the premium kind of consumption which has taken off. So I think that is something which is going to be fairly restrictive. Otherwise, what Saugata was talking of, growth of 7%, is something which would have been possible. But I think because of the fact that consumption has gotten restrained, the same thing holds also for investment, where if we leave out government expenditure, I think private sector investment has been muted. So that's why we're looking at 6.6, 6.7%.
DK Joshi, India remains a bright spot globally, while the rest of the world continues to slow down. Is that the right way to look at it?
Well, till second quarter, I think many countries have performed, outperformed, so to say. Even US.
Okay, we have the number right now. It's 7.6% is the number. India July-September GDP growth 7.6% versus 6.2% a year ago. That's the big breaking number on the second quarter GDP that we have up on the screen. 7.6%. Obviously perhaps the fastest growing economy. I have more data. The latest data shows farm sector growth at 1.2% versus 2.5%. I'm going to quickly rattle off the numbers as they break. GVA growth 7.4% versus 5.4%. I repeat for those who may not have missed it, GDP growth at 7.6% versus 6.2% a year ago. Construction sector growth at a stupendous 13.3% versus 5.7%. Nominal GDP growth 9.1% versus 7.2%. Mining sector growth at 10 versus 0.1% in the negative. Manufacturing sector growth at 13.9%. So manufacturing so far in the subset, the highest 13.9 versus minus 3.8%. The GVA number, I'm repeating once again, was 7.6 versus 8.6% a year ago. These are the numbers that have come so far. So manufacturing leads at 13.9, followed by construction, followed by mining. So all of that, mining in fact coming into positive territory, and how and the farm sector numbers already which we have looked at. So this is the broad number that we have, all the details that we have so far of the second quarter GDP growth coming in at 7.6%. Saugata, quick reactions, and I'll keep bringing the latest compositional data as it comes. Saugata.
So, Siddharth, you used the adjective stupendous. I think that properly describes this number. We were, as I mentioned, on the higher side amongst the forecast, but this is certainly a surprise. I mean, a 50 basis point additional surprise on top of our already higher numbers. In addition, manufacturing. As Madan also mentioned, I mean, the financial results of the manufacturing companies did seem to suggest that the imputed GVA would be relatively high. We were at about 4.9%, but this number is absolutely stunning. Other than that, as I mentioned, agriculture, small uptick from -1 to the actual number of 1.2%. But overall, I mean, it's a very broad, balanced set of numbers across sectors. So this is not just one sector driving the growth numbers. Very broad-based from the results, from the numbers that you printed out, and looks to be relatively robust.
Okay, Saugata, I missed the last part there. There was a bit of a weak connection. But Madan, to you, with your thoughts on the numbers that you have just heard.
Yeah, it's obviously very good numbers because it's 100 basis points higher than what we had projected at 6.6%. So I think this is coming, it looks quite like a dreamlike number. And I think the only concern I would have is whether this kind of thing is actually sustainable in Q3 and Q4, because we should remember that Q2 is relatively a period where there's not too much of excitement because we don't really have the agricultural crop coming in. It starts coming end of September, mainly comes in October, November. So it's more of a little bit of agriculture, which has actually come in the positive terrain out here, and we are, and even the festivals, everything has gotten prolonged into the pushed forward into the third quarter. So I think the third quarter will probably hold a very good clue about the kind of recovery or the kind of acceleration which you're seeing in the economy. But I think this is a very good number because if you look at 7.8% first quarter, 7.6 second quarter, average I think it should be around 7.5, 7.6%, which means that we are well on a high growth path. And even for the full year, we had an estimate of around 6.5, 6.6. We may have to go back and calculate whether we need to revise it further upwards or not. But I think a lot would that depend upon how we really do in the third quarter. But I think this is a very good foundation which we have for the full year.
Mr. Joshi, how do these numbers look to you? Are you surprised?
Yeah, I think a little surprised. The momentum is much more than we had anticipated, and it's a positive surprise. So I think that's the good part of it. I think the most important development is the revival of the goods segment, which is manufacturing, I think, doing well. And construction activity strong also means that the employment situation will improve, because construction is among the most labor-intensive sectors in the economy. So I think for both the strong performance of manufacturing as well as construction, I think is supportive of employment generation. So I think that's the good part. I think agriculture this year is a bit shaky because of because of the rains were low, and then apart from that, I think the reservoir levels are quite low, so that will also impact Rabi production. So I'm a little worried on the agri front. I think the non-agri is roaring.
Non-agri is roaring, agri a little worry, and more sectoral data. Industry growth at 13.2% versus minus 0.5% same quarter year ago. Services sector growth at 5.8% versus 9.4%. July-September private final consumption growth at 3.1% versus 8.3% in the same period a year ago. So services down, industry roaring. So we now have at least three, if not four sets of numbers, three in fact: manufacturing, construction, and of course industry growth that are above 13%, and you have mining at 10%. So explain. And government consumption growth, that now that number also coming in, demonstrating what's been spoken about by all economists. Government consumption growth at 12.4% versus a negative 4.1%. July-September capital formation growth at 11% versus 9.6% a year ago. So 13 is clearly, Saugata Bhattacharya, 13 is clearly not an unlucky number as far as the Indian economy is concerned at this stage, Saugata.
No, so I mean, certainly a very good number, as you mentioned. There are two things that come to my mind. Madan pointed out one thing. So this includes the month of September. My guess is that if you see the inventories number, the change in stocks, you'll see that very high. So my guess is, preparing for the festival season, there was a large stocking of inventories, which we have heard. I mean, people, companies, manufacturers importing electronics, other items, etc., in preparation for the October-November sale. So that's one. The second one, which explains both construction and the overall the capital formation growth that you talked about, is government spending on capex. Now, how much of this is getting supported by private sector capex is something that we need to wait and watch. But my sense is that the high spending on capex, both by the center as well as due to the devolution to the state governments, even with the state governments, that is the explanation for both capital formation as well as the construction sector. So these are the two segments that come to my mind. Whether the manufacturing holds up in the October, November, in the Q3 numbers. But even there, from the numbers that we have heard during the festival sales season, there is cause for optimism that it's not just from the larger metro cities, it's also true of the tier 2, tier 3 cities. So it's not just broad-based across sectors. Now, demand growth momentum seems to be broad-basing across geographies. There's one final thing that I want to point out. A lot of this growth that you're seeing, particularly the manufacturing side, all the electronic goods, etc., is getting driven by credit. So, I mean, retail credit, personal loans, other loans, home loans, auto loans, etc., has been one of the factors that's been driving consumption demand. Now, with all the microprudential restrictions that the RBI has put in, how much this holds up also now remains to be seen.
That's a very important point, because to some extent the brakes have been applied on this. Madan, I don't know what else you want to add, but the question that I have for you is, explain this services sector, because credit growth, flights, if you look at some of the other indicators in terms of services sector consumption, you look at what's happening in hotels, restaurants, hard to find even a hotel room, and during that quarter as well. What explains 5.8% this dip from 9.4%? Was that just a base sort of?
No, in fact, Siddharth, I would tend to think it's more a case of the base effect, which has brought this particular number down. Otherwise, as you mentioned, I think each and every segment in the services sector has actually been doing independently well. When I say independently, it's based on other kind of indicators which normally track it, not just the PMIs, but also, as you mentioned, we're looking at bank credit, bank deposits. I think they've all been growing at double-digit level. The same thing holds for trade, transport, because even something like hotels, restaurants, your GST collections, which get into your trade numbers. So they've all been positive. So I think it's more a case of the base effect which has brought this number down, because even this number of 5.8% which you're mentioning is not very, very low as such. But yes, compared to the headline number of 7.6%, one would have expected this number to be closer towards the 7% region. So it is the base effect which I think has brought this number down.
DK Joshi, the pace at which, and I think the word that was used at the start of the show was momentum. I think this is not just momentum. I think the economy is rapidly moving down a very fast highway.
Yeah, I think it is. First half is very strong. I think the second half may not be that strong, but overall, I think this year the Indian economy is set to outperform initial expectations and be one of the fastest growing large economies, for sure, fastest growing G20 economy. So I think there is, and the interesting thing is that there is more rebalancing of growth. I think the goods, the manufacturing sector is also coming back. And I think, as I said earlier, the employment aspect also, it gives a positive cue towards that, because construction and manufacturing both promote employment. I am also a little puzzled about this decline in services, because the PMI for services for this quarter was at 61, which is a very high expansion zone. But the difference is that PMI measures over the previous quarter. I think it would this is over the same quarter last year. So there is some, I think, year-on-year versus sequential momentum. I think both capture different things. But I was expecting a much better performance of services and somewhat lower performance of manufacturing. But I think these are world-beating numbers. I mean, there's no doubt about it.
World-beating numbers. That's a good point, and that is going to provide a GDP booster for Friday markets. Viewers, the month of November has seen our markets go up 5%. And 30th of November today, as we see this big data come in, there's also data, at least in terms of expectations, that will be political data from the political stock exchange. But the Bombay Stock Exchange and the National Stock Exchange are definitely going to celebrate this data. Saugata, in all those celebrations of India's economy continuing to move ahead, clearly the fastest growing economy in a world where there aren't too many bright spots, should what is happening to agriculture be a spot of worry, or do you see that getting sorted out because that was on account of specific weather related, monsoon related disruptions?
No, you're right. I mean, I do not want to venture very deep into this, because not being agricultural economist at all, I mean, not even playing one on TV. But it does seem that agriculture is likely to be a problem. Not in terms of, I don't mean in terms of actual output or whatever, which is probably likely to be quite good. In addition, the MSP increases that have been announced on the cereal crops, etc., will also provide a fair bit of income to a large segment of farmers. But together with this, I think, and on top of that, I mean, the two-wheeler sales, etc., also seem to suggest that rural demand is in fact increasing. In fact, I've heard growth numbers in the rural areas of about 6.5%. As opposed to a 10% urban sector growth. So it does seem that there is, I mean, the rural economy seems to have bottomed out and gradually recovering. I'm not very sure in addition to the actual volume output of food grains, etc., and the MSP increases, how much the ancillary rural segment, remember that agriculture is only about half of the rural economy, how much government spending, etc., on rural roads, rural farm roads, equipment, etc., how much that is likely to provide additional rural demand in the system, that needs to be seen.
Madan, taking that point forward, would it be okay to argue that in the remaining part of the year, and we have already sort of in the balance 6 months, till the 31st of March, this is the 2 quarters prior to the election. So the government of India will go all out in trying to ensure that no dark spot remains. And we have already seen several announcements, some of which will have an immediate impact, some which are spread out over 5 years, for example, the food scheme continuation, and there are others that are also work in progress. So will it be fair to say that with energy prices in India being kept in check at the retail level for petrol and diesel, and the government continuing to make an all-out effort to ensure that projects and various other things happen, and I'm not even talking about Lord Ram's temple, there will be sustained driver for the Indian economy during this crucial 6-month period as well?
No, I think whatever you're saying will hold, but we should remember one thing, that everything will be within the realm of the budget which has been drawn out. There's going to be no compromise on that fiscal deficit number. So the way in which things are articulated to give us a feeling that there's a lot of money being spent, just remember the free food scheme is already running in, and that 2 lakh crores which was to be spent actually continues. There'll be a little bit of upside to it based on how the MSPs or the prices really move. But by indicating something like 5 years, you get a feeling that everything is happening now, but we should remember is happening over a period of 5 years and not in a single year. So within the realm of the budget, yes, definitely there'll be a lot of push being given, but I think a lot of relief also has to be provided to agriculture, because in this particular year, not only is the kharif crop down, that is something which has already been mentioned by the Ministry of Agriculture, but we should remember that there could be a threat even to the Rabi crop. The reservoir levels are down. The Rabi sowing so far has been less satisfactory than last year. So there could be issues in terms of agriculture. So there may have to be a certain focus which has to be provided on relief rather than a boost which is being given to growth directly. That is something which will probably occupy the mind of the government when it comes to agriculture. For the other schemes, as you said, it's going to be working within the budget. So I don't think there's going to be any case of breaching the 5.9% fiscal deficit number for this year. And probably we'll continue even in the next budget to move towards the consolidation part, maybe 5.4, 5.5% for the next fiscal year.
Absolutely, and one of the early indications that we here at Business Today Television have picked up and reported as far as the budget is concerned, expect a normal budget of sorts, as much as normal it can be as a pre-election budget, but one of the key outlays will continue to be road transport, and we have seen significant outlays, and that is likely to in fact increase because that's going to be a showpiece. I'm coming to you, DK Joshi, and this is really to ask you that now that this data has come in, we have digested it, the markets will look at it tomorrow. What should we be watching out for as far as our macro economy is concerned?
Well, I think one is the weather, because the El Nino is projected to linger on till next year. And as I said, the water levels are only 80%, I think, the reservoir levels. So somewhere I think it will. And why I'm saying it's a concern, because inflation in general is not an issue in India. It's only the food inflation which is pressurizing overall inflation. So I think good agriculture output is very critical. And then the second is, I think, the impact of the rate hikes that RBI had initiated in 2022 early. That, I think, the peak impact of that is going to be felt, and RBI is also trying to improve the transmission. So I think the rates, lending rates, should go up a little bit more, and together with macroprudential norms, I think they will be slowing the economy a bit. I think they will not derail the growth story, but they will definitely work towards slowing the economy. And then the third thing to watch out for is the external segment, particularly the Middle Eastern crisis, which is still simmering, and I think that that part of the world is a major choke point for energy. So I think So far, I think the oil prices have been pretty range bound, but I think that remains a risk that needs to be monitored. But overall, I would say that this is an excellent backdrop for the budget that is to be presented in the month of though it's an interim budget, but I think this forms a very good backdrop for the budget. I think a robust economy.
Saugata, the fiscal deficit running at 45% for the first 7 months of the fiscal year. So I don't think there are worries in that regard. But the same point really in terms of what should we be watching out for as far as the remaining months are concerned, and do you agree with the RBI assessment? Because I would say that the RBI can today say that they have managed to keep some significant control on inflation and also allowed growth to continue. Is that the view that they will be taking?
So one thing Dr. Joshi mentioned, I mean, did a very good sweep of the potential problems that might arise in the system. To my mind, I mean, the key risks that India might face going forward is from the external sector. One, we are getting very mixed signals. I think the rate hikes are more or less done. We are not going to see any more from the global central banks. But the risks that now seem to be coming onto the forefront is a fair sharper than expected slowdown in some of the developed market economies, which will.
But no recession. Saugata, sorry to interrupt you, but much sharper slowdown, but no recession. Because remember, there was a time several months ago that we were talking about recession, and that's faded away. So therefore, shouldn't we be seeing that as a better than expected development?
Yes, I mean, absolutely. So if a recession at all happens with inflation being sticky, etc., it will probably be a very shallow short one in 2024. I don't see anything coming in this particular year. Markets are factoring in rate cuts, particularly in the European area. So that's the first one. Then even the Federal Reserve markets are expecting the swap curves are pricing in rate cuts in 2024. My worry is that the various channels. China begins to do much better than it does, so that will have an impact on commodities prices, particularly metals. And that might have an impact on India. Oil, as you know, we are already hearing the first signs that OPEC Plus is going to extend the oil production cuts. So that will also provide a pressure on oil prices. But the most critical thing is how India's exports, both of goods and services. As you know, services, particularly software services exports, are not forecast to be doing very well. So the worry is that this spreads across merchandise and services segments. So that's the critical area, which will probably have a slight bit of impact also on the tax collections, GST and other collections in the system. The other worry is nominal GDP growth might be lower than the 11% that has been factored into the budget because of the negative WPI inflation numbers that we are seeing. So that will arithmetically tend to increase the fiscal deficit given everything else. So that's the worry. But the key issues remain, the key risks to India remain from the external sector.
Madan, happy surprises on the upside at 7.6%, but what should we be looking out for, especially in terms of any worrying sort of likely developments?
No, actually, as I mentioned also earlier, I think the worrying developments are what happens to agriculture. That is primarily the Rabi crop, because that's something which will have an effect on the second part, which we're talking of demand. Because if you go back to the corporate commentaries which came out when the Q2 results came out, there was a lot of concern for all the consumer goods industries, companies, where they were talking of uncertainty about rural demand, and they were hoping that rural demand would revive in the festival come harvest season. Now that the Kharif hasn't quite done done well. Festival is something which we need to see. But if Rabi also doesn't do as well as what one is expecting, there could be concerns out there. And then I think the third issue is, of course, in terms of private sector investment, something which we haven't seen too much of traction. It's not been broad-based, more or less restricted to the infrastructure sectors, that is cement and steel are places where we are seeing investment taking place, not really in the consumer goods domain. So I think these are the worries which would continue, but I don't think these are things which can be sorted out by the government. The government has tried the PLI quite aggressively, but it's had very, very limited results. I think these things actually evolve over time, and there are no quick fixes for it. And I think one has to be patient for the consumption cycle as well as the investment cycle to turn around in a more broad-based manner. I mean, we'll always be talking of qualification, saying some industries are growing, consumption is more premium-led, urban-led, not really rural-led. We need all these pieces to fall together, which will take maybe another year or so.
All right. DK Joshi, one final comment. So, if we were to summarize this, farm sector growth is weak, manufacturing is very strong, private consumption is weak, and overall, if we see the economy continues to fire on most cylinders. Therefore, would you be able to provide a full year number basis this latest data?
Well, I think our published number is 6.4% growth for this year. So that will have some upside. I think we'll look at the cues for the third quarter and then accordingly take a call. But right now, I would say that there's an upside to that 6.4% growth because the second quarter growth has been much higher than what we expected.
Okay. Quickly, Madan, are you at this stage looking to review your full year estimate?
Yeah, we definitely would be reviewing it. And just like how DK said, we had 6.5, 6.6, there could be a slight upside. I can't commit to a number, but maybe 0.1, 0.2 upside is quite possible.
And Saugata?
So we had already updated our initial number of 6.4% to 6.6 basis our forecast of 7.1. So now if everything in the H2 numbers are as good as we are forecasting, then obviously from 6.6, we need to go up to 6.8 or 6.9. I mean, and you never know what else the upsides might be.
All right, viewers, so second quarter GDP growth at 7.6%. It's basically blown away all estimates, every single poll. It's a data that is far, far higher on the upside and a big positive surprise. But with all surprises that may bring smiles, there is always an element of caution that is required. And we'll now basically get two key developments. One, exit poll data and eventually the final data, and that as an indicator for the market. So if you're a market person, I'm sure you'll be logging into your terminals pretty early come trade tomorrow, that is Friday. And obviously a lot of the action will now shift to the Reserve Bank of India and the next monetary policy review. We'll keep bringing you all those developments, including even the India Today Group exit poll in a bit from now. So do stay tuned in. Until then, goodbye.